Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are you're watching this video because you got an email from me telling you it's up on YouTube for you to watch or listen to via podcast catchers. Interesting moment. This is 9:45 Friday, July the 9th. We're actually live doing this video because I want to talk about some of the things happening in the stock market. I'm going to talk about the individual stock market trader and how he has not been deterred at all with the recent volatility in the market. In fact, in some ways, the influence of the small trader perhaps is greater than it's ever been in the years I've been trading in the markets, which has been actively since really 1998. So I've been around for a while, and in some ways, what's happening at the moment is very unique. But I'm going to show you what I'm talking about with some hardcore statistics. So this just isn't some opinion I'm spouting off, which is what you see so much of when you turn on the nightly news programs. They're like opinion channels. But we're going to talk about data and facts to show you this is just some sort of opinion. So I got to load up my trading screen, and then we're going to get into what's going on today and what it is I want to talk with you about in these markets in particular. So I got to share my screen here with you. And as you can see today, we're having a good open. My Robinhood account, which has 7 positions in it, is up 1% for the day. That's nice to see. We're going to return to Robinhood shortly in what's going on the top 100 list. If we look at the broad market averages, what's happening? S&P up 25, Dow up 307, NASDAQ barely up, but these up days are happening after we've had 2 pretty rough back-to-back down days. As I said, though, yesterday, I did not think that this was the start of some instant collapse off the highs, although there are some things we got to be on guard of that could signal a meaningful peak within the next few weeks. But not this week, not today. But if we turn to other things, oil is up to 74, gold's hanging around 1800, silver hanging in there around 26, euro's rallying today, 10-year bond yields up after they were down to 1.25%. And check out my previous video that I did yesterday. It's devoted all to the bond market, which I believe is perhaps the most interesting move in the overall markets this week is what's happening in bonds. Previous video talks about that topic, and I actually did a trade in a bond fund yesterday, which will show you the views I have on them for now. But definitely the most interesting move. AMC is down 1%, which I want to talk with you about. But this is the thing. I've been meaning to write a blog post about this article that was in the Wall Street Journal on June 18th, but almost a month has gone by. I haven't had the time to sit down and do the writing, but this was in the Wall Street Journal. Headline: it isn't just AMC. Retail traders increase pull on the stock market. This is really interesting because there has been a surge of people trading in the markets for the very first time in the past 12 months, really starting around May after the stock market crashed. People started getting these stimulus checks. More and more brokers reduced their commissions to 0. Those 2 combinations and one third factor, which deserves a whole nother video, that's the need to make instant riches that many people feel. But these 2 primary factors drove millions of people to open up Robinhood accounts and get in trading for the very first time. Commissions fell to 0 on E-Trade, on Ameritrade, making it even more tempting for people to do it there too, which they have been doing. But the growth in these traders is impacting more than the GameStop play, impacting more than what we saw in cryptocurrencies, which have been major things that these people are trading, but other stocks too. And when it comes to the aggregate entire stock market, they have been having an influence that they have never had before, not even when I started trading in 1998 and 99. And this article has the statistics that demonstrate that this isn't opinion. This isn't just something you think is happening. The statistics show it is real and it's increasing, not decreasing, which when I read this article made me realize, wow, this is really something, because we saw a lot of stuff take hits in March. We saw Bitcoin top out and collapse. We saw the ARK ETF dump. We saw stocks like Peloton crash. We saw Tesla break down. And many of the fad stocks that make up much of what people own, much of what the small traders own, began to lag the market. It looked like a troubling time. But when the market rebounded, most of these stocks and trends did not come back the way they were, but the retail trader hung in there. In fact, the retail trader shifted into new trend plays, chasing momentum. The people that lost on GameStop then tried to flock into AMC when it surged last month. Now they're just stuck, but they jumped. That's what they're doing, jumping from one thing going straight up that they see going straight up into the next thing and the next thing and the next thing. That's the trading pattern that the statistics show that the small trader is engaging in, not the big money, not the hedge fund, not the institutional player, not someone that's got several $1 million, in their investment accounts, but the small trader, the person on Robinhood. This is the type of stuff they're doing. And the average Robinhood trader has just a couple $1,000s in their account, but they're devoting all of the money into one or two trades at a time, trying to get rich quick or try to do something similar in the options market. But the influence is much greater than it's just absolutely amazing. So let me quote these absolutely amazing paragraphs in this article. Individuals, investors' share of U.S. equities trading volume is 20%, double the figure from a decade ago. 20% of all trading volume is from small traders. It's absolutely incredible. In January, when individuals piled into so-called meme stocks, retail investors' activity was responsible for 26% of all shares traded in the U.S. stock market. 26%, a level I don't think has ever been seen before. Their data goes back to 10 years, but even when I got in the markets in the 90s with the rise of the day trader, it wasn't 26% of the volume. It's absolutely amazing. Here's an incredible statistic. Activity from individual investors trading on Robinhood markets accounted for roughly 4% of trading volume in January. 4%, absolutely incredible. E-Trade, 2.4. Combine those, 6.4. So 1/4 of all trades in U.S. stock market are small traders. And 1/4 of all those trades are coming from either E-Trade or Robinhood. The influence of the Robinhood trader is absolutely enormous in these markets for the moment. It's not going to be like that forever, but that's where we are now in the summer of 2021. And here's what they do. See, if you can we don't have access to this information, but if you can contact the brokerage companies, you're a big company, or you're doing a research project and they'll let you in, they can give you access to aggregate trading data, aggregate trading accounts, something I'm going to talk about, a big and key study that was done in the 1990s about what people do. But this is, what are people doing? Well, we can see what they're doing on one hand by looking at that Robinhood top 100 list, which we'll look at in a moment. But how are they trading? This is interesting. Individual investors tend to pile into trades together, either for individual stocks or broad sector themes, and strive quickly to drive the price up in a matter of hours or days, almost as quickly, data shows individual investors pull out of those trades, moving on to the next. In other words, what you have is the creation of a tremendous electronic herd inside the stock market of masses, millions of individual traders are herd together into a few individual stocks or one or two sectors at a time, and then herd out just as quickly as they got in. We're speaking hours, if not days, into the next thing. They're essentially chasing whatever's going up the most, and on any given day, any given couple of days. And you'll see why they do this in an instant. I'm going to show you how they're actually encouraged to behave as electronic herd. So there's a chart somewhere in the article. I'm trying to, well, I guess it's another article. Anyway, there's somewhere else I saw that the number of trades is like 4 times what it was among individual investors as it was 10 years ago. Look, in 2005, it was evident by then that there was a new force in the markets that hadn't been there in the 90s, and that was the robot trading program, the algorithm. That rose up. Now, this year, it's the rise of the small trader that is the news story of 2020. But I thought they were taking a hit. They were taking a hit in March, and that could hurt them so much that many would back out. But they had not been backed out by those hits they've taken. If anything, some people are getting even more aggressive, but they have not changed their trading behavior at all. They were chasing going into this year. They're chasing even more aggressively now. So if we look at Robinhood, and we can see their most popular top stocks that they own listed by the order that they own them. And Tesla's number one. It's been number one for quite some time. Despite, I don't know why they still hold it, because Tesla is now lagging the stock market. It's around its 200-day moving average, and it's failed to rally even in the past couple of weeks as the NASDAQ and it made a new high. Tesla's just stuck. It's a sad situation. But AMC is number 3 on the list, Sundial number 4. And we're going to use AMC sort of as a case study of what the small trader in the market is doing. They are making decisions purely based on price action, nothing else. Look, I've talked to about a dozen people myself personally, some that are friends of mine that have gotten into trading for the very first time since last May. None of these people use really sophisticated technical analysis. They don't use chart indicators. Almost all of them have Robinhood accounts. Many of them don't know what market caps are. They don't know what price to sales ratios are. They don't know what PEs are. They're kind of moving from one trend shooting up to another, trying different methods. They might lose, on doing one thing, then they'll try something else that's just as risky. They're not, but if they would just stop, and I'd say this, not just about these 12 people, but to the millions of people who've come into this for the first time, the best thing you could do is stop. In fact, sell everything you own and buy a bunch of books. Buy One Up on Wall Street by Peter Lynch. Buy How to Make Money in Stocks by William O'Neill. Buy my book, Strategic Stock Trading. Read and learn how the markets truly work, because it's just herd behavior of chasing led to big hits in March. It's going to lead to big hits again when this current momentum in the market just leads to a 10 or 15% correction. And one will come, if not in August, then in the fall after, it's going to come at some point. It always does. I'm not trying to predict when, but I'm saying when it does happen, so many people doing this electronic herd thing, which is what the millions are doing, are going to get hurt, but because they don't know what they're doing. And Robinhood gives them no information. They just see these lists of stocks and just herd into them because that's what other people are doing. It's the only thing they're presented with. And they're not using better computer programs or chart programs or scans or anything to really make the decisions. That's why there's so much concentration. But let's talk about AMC, number 3 on the list. And I'll tell you the actual trade I've got on now for AMC, which is something that these people are not doing, but it's working for me. So if we look at the chart of AMC, what we see is a stock that rose up on the list when it had this huge rally from May to June, $10 to 70. That move brought all these people into the stock. And on message boards or predictions, this is going to go up to 500. And people read this stuff. They think, oh, GME went up. This can do it. I'm piling in. Maybe this is a big Dogecoin. All they're reacting to is price action, and nothing attracts the herd more than big daily price gains. So the herd piled in, and then the stock, though, peaked out because valuations got so crazy that they're disconnected from reality, still remain disconnected from reality with the stock at $45. This stock is not worth $45 a share. This stock probably isn't even worth $10 a share. Why do I say that? Because of valuation metrics, something that most people who are long this stock have no clue about. And let me show you the specific valuation metrics. This is Yahoo Finance. AMC Entertainment is losing $15 a share. AMC Entertainment has a market cap of $24 billion. Well, lots of companies got big market caps, but this company is not worth $24 billion. This company is losing $15 a share when the stock is $47 a share. Absolute insanity. So the price to sales ratio is 22. Let me repeat that. The price to sales ratio is 22. To explain what that means, for every you're paying a multiple of $22 for every $1 of revenue this company makes. It's not even profit. If you were to buy a company in the real world, like say a restaurant, you typically look to pay no more than 1 price to sales. Peter Lynch, who wrote One Up on Wall Street, said, look for stocks with 0.5, trading at a valuation discount. That's how you trade, or that's how you invest. But people on Robinhood, they're not thinking about investing. They're thinking, oh, this is price action. Let's drive it up in the herd. But valuations matter. And when the price momentum peaks, then valuations cause reality, because stocks can only stay disconnected from reality for so long. So price to sales ratio of 22 is one of the highest you'll find in the entire stock market. And this company has an operating margin of negative 412%, return on assets negative 10%, revenue of only $449 million with a $26 billion market cap, gross quarterly profit of negative $885 million last year. In other words, this company lost close to $1 billion. Net income per share of roughly negative $3 billion. It's insane. And it's got $11 billion in debt. A book value negative 5. So in the real world, no other company would buy this company out because it's such a financial disaster. In fact, cash flow is negative $1.26 billion. But this is not talked about on Reddit message boards. These numbers are not even looked into by most people who buy the stock simply by looking at a phone app and what they see in Robinhood, which contains no basic minimal information about the fundamental reality of stocks in general. So this is the herd in the market. The herd's influential in moving stocks on a short-term basis, but their activity is not focused throughout the entire stock market. This is a key concept. Their activity is focused on, at any one given time, like 100 stocks, and really dedicated to 20 or so stocks at once. So this is an interesting thing where there's extreme speculation in much of the market, and that's what everyone's focused on. But if you look at stocks in general, they're actually starting to trade not as bullish as the averages are. And that's a topic for another video later. But I just wanted to show you this AMC thing, that article in the Wall Street Journal today, and what Robinhood is showing people, herding them into these top 100 positions. And nothing exemplifies the beliefs or the way people are trading in 2021 more than cryptocurrencies and Bitcoin, because these are collectible virtual coins that have no value in the real world. You know, no one can hold them. No one uses them as money in the real economy. And the people that buy them just think, oh, this is going up. I'm buying. There's predictions it's going to go higher. So I'm buying. And that's the only reason people bought them. And now they're caught holding the bag. When we came into, let's say 10 months ago, there are like 4 million people that owned a crypto coin. By March, over 70% of Robinhood account holders own a cryptocurrency. They all herded in right at the top. And that's how tops are made. You see, that's the problem of herd behavior. When it's like a pyramid, when everyone herds in, at some point there's not any people left to continue the herd or to become new members of the herd, and then prices peak. That's just basically what happened to AMC. What's the trade I got on AMC? Simple. I'm doing a bear call spread. That means I sold call options above the current trading price, way above the current trading price, in order to collect and take advantage of the extremely high volatility premiums that are inherent in the options that are trading. The volatility premiums are over 300%. Which is insanity. The stock is priced as if it's going to triple. And the options I sold all expire at the end of next month. I'm not recommending you do options if you've never done them before. I'm just telling you the trade I put on. Basically, I made a bet that this stock will not go above 80, while people buying the options are betting it's going to go above 80 before the end of this month. I think they're sorely mistaken, but that's not the real reason I did the trade. The real reason I did the trade is because the volatility premiums in these options are so sky high that I can make a little bit of money. It's not a massive trade. It's just a small trade I did in a much bigger account. You know, just a little thing I just did. But it's a trade. It's a trade I got on AMC when most people are thinking the opposite. They're still holding their AMC stock. That's why it's the top third most owned stock on Robinhood. And the most wildest of gamblers are buying these ridiculous call options, which I sold to some of them. So if you want to have the mentality that the stock market is a casino, I don't think you have to look at it that way. But there's no doubt many people that are, and they want to buy call options to make straight bets. Well, most bets expire worthless. 90% of options expire worthless. So I sold some bets to these crazy gamblers out there that are making up the electronic herd that has formed in these markets since May. I think this herd is going to a bad spot the next time there is a 15% correction in the markets. And I think one will come. I say that not to say that it's starting today or next week. I think things are okay. I don't think the drop of the last 2 days represents the start of a major decline. But I do think one will come. And I think most of these people are solely unprepared for it completely. So this is kind of, I think, some of the big things happening in the markets. The individual investors' power or reach is gone to the point where they now make up, 1/4 of all trading volume. But that volume, again, is not focused throughout the entire stock market. It's certainly not in gold and silver and mining stocks. Because when we look at the top 100 list, how many gold ETFs, silver ETFs, or mining stocks are on this list? Let's go look right now. I have yet to see one. I'm going down the list. Yet to see one. Yet to see one. Going down the entire list. And none. Not one. So everything I've been talking about is about trading. Investing is, I believe, where the real money's made. That's when you buy things you can believe in and hold them. You don't like just say, I'm going to play a pyramid game and try to get in this herd and get out before it tops. Real investing is where you look at fundamentals, you can get dividends, you can see your account grow over time. It's actually less stressful. That's really what I'm about. But it's unpopular for most of the people that are getting into these markets to think of themselves as investors, because there's a real get rich quick mentality at work behind what's going on. They're turning what could be a way to build wealth over time into a virtual casino for themselves. It doesn't have to be that way, but it is what it is. So those are my thoughts for today in this live uh, video session. And it's good to be able to do this with you. And if you have come to me for the very first time, having found this randomly on YouTube, what you need to do is click subscribe and then click the alarm bell, and YouTube will send you an alert the next time I go live, the next time I put a video up. You're gonna want to know that. I tried to talk more about things I own, real investing, and so forth. But we had to take a look at this incredible article. I've been meaning to write about it, and so I was like, well, I'll just do a video about it. I haven't found the time to write about it. So I'll be talking with you later.